All right, dear investors and traders, let's see how we can perform vertical and horizontal analysis using financial modeling prep. First of all, these two analyses will help you understand a company's financial statements, and you will be able to see which items are rising, and you will be able to detect abnormalities. And by doing so, you will improve your financial models and will know what to expect from your selected company. And if you know what to expect, you can improve your assumptions and make more accurate stock forecasts. First, let's start with the vertical analysis. Vertical analysis is expressing each item in the financial statements as a percentage of the base amount. The base amount we're taking from the net income will be the total sales. From the balance sheet, we can take the assets, total assets, or equity plus liability. And from the cash flow statement, we can take the net cash from operating activities. And let's go step by step, and you will see how this thing is working and what is the base year. Well, first, you need to connect the FMP add-on in the extensions. I will put the link to the step-by-step instructions on how to connect it. Link down to this video. After connecting, you will have something like this written financial modeling prep. Then you open your Google Sheets, and then I've prepared a simple sheet for you over here with stock ticker, annual report, and 5 years. Then you press equal FMP income. You see the income statement, and you have 5 different fields. Symbol is the symbol of our stock. Then the limit is 5. In our case, we're extracting data, annual data for 5 years. And then we take the annual data. Then number 4, you see the data type. Data type you can extract in JSON, for example, but for this video, we don't need it. That's why we're skipping this part. And the headers, this is the fields that you want to fetch. In our case, we're fetching all this data. That's why I am highlighting it and pressing, but you can leave this field blank. You just need these three fields. This is the ticker, the period, and the number of observations. And then you hit the go button or enter. And now the financial statement, the income statement is loading. Now let's perform the vertical analysis. For the vertical analysis, you compare each item in the financial statement to the revenue. First, let's copy this thing to here. And now let's perform the calculation. So revenue is revenue. We divide it by revenue. This would be 1 or 100%. We divide it by the base our base number. In our case, it's a revenue. Press the function and F4 key, 1, 2, 3. So the dollar sign should be over here. We do this in order to not to copy the formula manually everywhere, but we then extrapolate this right here and then copy to all other places. And here we go. Now we have percentages, and as you can see, here we divide gross profit by revenue, and here we divide the cost of revenue by revenue. Revenue is our base year, and then we have expenses divided this expense by the revenue, and we get the proportion of each item here in comparison to revenue. Now, how you can use it and what you should look for in this data. First of all, the gross profit, this is very important. Now you take the revenue, deduct company's direct costs or cost of revenue, or sometimes it's called cost of goods sold. And now you get the gross profit after deducting company's direct expenses. And you will get this number, then you divide it by revenue and you get 44%. First, you need to choose company with the highest gross profit. This is very important because companies with higher gross profit, their management manages costs more effectively. Second, this number should be stable from year to year. It shouldn't be greater than 3-4%. What does it mean? For example, the 1 year it was 37. If it is declining by 20% the next year, it's bad. It means that the management is not controlling its costs. If it's rising 1 year and then falling again for more than 3%, it's not good again. This number should be stable, as in case with Apple shares, we have more or less stable data, 31, 40, 41, 33. But if it declines to, let's say, 37 or 35, which is more than 3, then it would be the bad indication. So you should monitor this gross profit. Then you also have net income. The same principle applies here. It is also, but it's after deducting all other expenses. And as you can see with Apple shares, you have the great net income. You can also compare the company to the closest peers and choose the stock with the highest ratio. But not only this, you should also take other ratios and analyze other financial statements closely. Now let's go to also compare other items, and if you see huge upside, then go to financial statement, read auditor's comments to understand what happened with the company, why they experience rapid increase in some costs. This is important for your future evaluations, for your future forecasts. Now let's start with the balance sheet. Right now I'm showing you only important moments and how to use this vertical horizontal analysis. I'm not spending time to go into each item in detail, but I think you got the idea. For the balance sheet, we press equal, we type FMP, balance, and you see balance sheet statement. This is what we need. Again, we put the symbol Apple, then we put the limit 5 years, then we put the period. This one is blank, and then for the headers, we simply put these headers. Again, you can leave this field blank if you want. And now we have data for a company's balance sheet. Again, we can copy this data right here. Don't forget to paste it as values, because here it's formulas. And now in the previous example, we divided by the revenue. It was our base number. In this case, we'll divide it by total assets. You can also divide it to total liabilities plus equity, but since total assets is simpler, let's take the total assets. So remember, each item in the balance sheet, we divide by the total assets. Let's find total assets. It should be somewhere, yes, this one, total assets. Again, press function F4 key, 1, 2, 3. This should be at the front. And now, why at the front? Because we copy it right from like this and like this, and we don't want this number to shift. Our base number, we don't want it to shift as we shift the cells. Now we have the percentage terms right over here. What you should pay attention to in this case, well, you should see the highly liquid assets as well. Apple has stable highly liquid assets, which is cash and cash equivalents, maybe some short-term equities, for example, as well. And then you should monitor the company's debt, long-term and short-term debt. If you see the rising debt, it will be putting higher burden on company, so it's not very good. And you should monitor how company is managing its liabilities, and also it's managing its assets, because if you see rising debt, aggressively rising debt, this may break companies' short-term or longer-term liquidity at some point, and there would be credit risk. This is more important to fixed income traders, but equity traders should also monitor this, because rising items, rising debt can negatively affect the share price as well, because someone will cover this. Analyst will mention rising debt. Yeah, especially if the company is attracting debt at the higher cost, this can negatively affect the share price. Now let's go to the free cash flow. For free cash flow, you do the same thing, FMP, you put free, no, let's try with cash, yes, cash flow statement, yes, this one we need. Again, we put a symbol Apple, then the second one we put limit 5, then the period, this one we skip as usual, and now we export some fields. And here we go. This is the company's cash flow. Again, we comparing. Important to know that vertical analysis is comparing each item to the base item in the revenue. For example, not in the for example in the income statement, it is comparing each item to the revenue. Like you see here, for the last year, for example, each item to the revenue. Then the previous year, again, each item from this year to the revenue. So it's comparing each item from the current year to the revenue. In the same is in the balance sheet. It is done to monitor the company's changes from year to year and to the base number. This is very important. And here we go. Now we have the cash flow. For the cash flow, we can do the same analysis. Let's just put the percentages. Let's not waste a lot of time. And this time we can divide it by net cash. I think this one. Let me check that this is the net cash. Yes, this one, N. Yes, that's right. Let's put the function key, function F4 again, and we are seeing each item. Yes. So basically, operating cash flow that we are dividing to is our base number. In this case, operating cash flow, it's a cash flow that is coming from the main company's business. As you may know, company has three sources of cash in and cash out. This is the operating cash that comes in and comes out from the main company business. It is investing activity. When company is investing heavily, cash goes out. When company gets profit from their investments, cash goes in. And financing activity, when company is borrowing money, taking credit from the bank, for example, you see the inflow of the cash. And also this may include other financing activities that is influencing the cash movement inside within the company. So by analyzing this, again, you should see huge number changes from year to year, and also see how numbers relate to the base number. In case with Apple, we see great stability over here, but of course, if you see large fluctuations, if you see large negative numbers, this will negatively affect analyst valuations and will negatively affect stock target price, because analysts will decrease the forecast, and then the stock market price may also drop. You should monitor here the cash flow from, as I've mentioned, there are three sources of cash flow. This is financing activity, investing activity, and operating activity. And you should monitor closely the changes in all those activities in the company's cash flow statement. Now let's perform the horizontal analysis really quick. For horizontal analysis, it's even simpler. You press FMP, then go to income, but this time you press the FMP statement gross, income statement gross. Again, you take three parameters. This is the ticker, then limit to 5 years. Of course, you can put more years. And the period, we put annual. 3 is enough. In this case, we don't need more data. And as you can see, it is already fetching the data in percentage terms. It is showing the change from in comparison to the previous year. As I mentioned, the horizontal analysis, it is comparing company financial data across multiple periods to identify trends and basically growth patterns. It is showing the changes in the financial statements over time. So in this case, for example, the gross revenue, it is declined from the previous year on 2.8%. If we double check it with the financial statement, let's calculate basic percentage change. So we divide the revenue from the current year to the revenue from the previous year. And yeah, indeed, we get 2.8% from here if we convert it to percentage. we get 2.8%, the same as the data is fetching 2.8%. So this is basically the percentage change. So you monitor this change. As you see, this year company's revenue dropped. Probably iPhone sales declined because iPhone sales constitute the largest portion inside the company's net income. But in previous years we see 33% upside. It was very good sign for Apple's company, but now we see a slight stagnation in those numbers. Again, you should monitor unusual activity in the income statement, and you should see what are the highest cost. For example, this is very dangerous, and you should monitor it closely. Gross cost of revenue, if you see huge upside here from the previous year, they may indicate some dangers for the company. It means that they have higher costs. And if you see a company with highly variable numbers here, like one year it's 10%, another year is minus 20%, another year is minus 40%, then it's plus 10% again. It's not good because, again, the management cannot control costs, and this level of unpredictability will play the bad trick with the stock price. And also you should monitor the other expenses, both direct and indirect expenses. You should see the net income, you should see the EPS growth. If the company is showing stably expanding EPS growth from year to year, this is even better. That means that there is a high probability that company will show better EPS next year, better than analysts estimate. But in case of Apple, it shows great stability, no large EPS surprise, and high probability that company will post EPS in line with analyst expectations on the next reporting period. Now let's see the balance sheet. The same way we put FMP balance. Where is that? Yes, balance sheet growth. Again, we put symbol as Apple. Then we put limit 5, and then we put the period. Hit go or enter, and you see the changes in the, I don't know why it's not in percentage, but let's correct it like this. Now you see changes in the balance sheet. Again, you should put attention to the debt. It should not be rising aggressively. You should put attention to highly liquid assets and see the company's investments, long-term and short-term investments as well. You should see very stable picture. This the higher the stability is, the better the forecastability, so to say, of the stock. That's why you should monitor this data closely. And the last one is the cash flow statement. We take equal FMP cash flow gross. Again, we input the same data. Stock ticker, limit 5, and then period, and hit go or hit enter. Now we should see, yes, we see the cash flow, but with cash flow, it's a lot of cash movements. That's why we see the larger differences over here. But I cannot go through each item over here. I can only highlight very important items. Again, it compares the items in the cash flow to the previous year. Well, first, we have this deferred income tax 100%. It's a change from the previous year. It's 100% decrease. It may indicate the some complete reversal or settlement of tax liabilities, deferred tax liabilities. Maybe some tax regulation happened, or there was some kind of a tax benefit, I don't know. So you should investigate it closely. You should go to the financial statement and see the auditor's report. Then what we have here, minus 648, it's a change in working capital. This can reflect changes in how the company management, how the company is managing its current assets and liabilities. maybe some very aggressive cash management strategies and some restructuring operations are happening. Again, you should read the financial statement and auditors comments to this to understand it closely. Then what we have here, 209, it's inventory, gross inventory. As we can see, the inventory dropped by 209%. This means that Apple reduced its inventory levels. Maybe they improved their supply, made it more efficient, decreased the production, or maybe they were selling their iPhones with the huge discounts. Again, this is not you should investigate this number closely and see what was happening. This accounts payable 119%. Maybe they reduced the purchased orders or something happened, and this number is in huge difference with the previous year. And this analysis gives you very, very valuable hints, and you should monitor very important proceedings from cash. Again, three ways company generating cash. It's operational cash flow, it's a cash inflow and outflow, then financing cash flow, and investing cash flow. From investing activities, financing activities such as taking credit, for example, and operating activities, that's the main company's activity. And then you get the free cash flow, the cash that is left from all these three activities. That's it, dear traders and investors. I hope my guidance was useful and the vertical and horizontal analysis. Now you know how to perform this analysis using financial modeling prep and Google Sheets. Thank you very much for watching.